Hi everyone, so welcome to Investing for Value. So if you haven't seen, China's stock market just dropped 8%. That's $445 billion wiped off the stock market, and the worst day since August 2015. So it's really showing that markets, as frothy if they have been so for a while now. Things are starting to correct themselves. There's a lot of fear in the market. It's particularly caused by the coronavirus. It's caused a lot of borders to be closed, a lot of businesses to halt their production, a lot of businesses to lose out in sales because they lose out a lot of like tourism business or export import type of businesses. So the impact is wide and it's gonna affect a lot of people. So it's kind of gonna be normal that stock market does pull back a bit because there's a lot of fear. So when there's a lot of fear, people sell, people want to hold money, they want to hold cash, they want to hold gold, they want to go bonds, but they don't want to go stocks. But that doesn't mean, this isn't a chance for you to look at your portfolio and revise it and go, do I need to hold cash or do I need to look at other stocks? And then, revise, go like, is there still stocks that you want to buy that you haven't been able to buy because they were so expensive? It kind of gives you this opportunity where you can go bargain hunting, which is sometimes really nice if you're holding a lot of cash. Not very nice if you're holding no cash and all stocks. So that's why, like, I don't advise holding all stocks. Hold a little bit of cash, so like when the price comes down, you can actually buy some. And if stocks don't come down in price, it's okay. You've at least reduced some of your risk, and given yourself an option in case prices fall. If prices fall, you don't have any levers to pull. You don't have cash to buy, and your portfolio is turning red. Even though if stock markets recover, it means you didn't have the chance to make the most of all the good pricing. And like if we're looking at China being a sign of things, it's not going to be great. It's likely going to affect the US market because the fear is going to be going around. So it's going to affect the US market, it's going to affect the world markets, and then it creates a bit of a domino effect. So don't expect this week or next week to be very like smooth sailing. It's going to be very choppy, up and down, but doesn't mean you can't take advantage of it. Good buying opportunities, good time to reevaluate your portfolio, and as I revise, hold some cash. Like even though like cash won't necessarily generate your return, and for a lot of you it doesn't feel fun to hold a little bit of reserve on the sideline. It's kind of that option that you have to reduce your risk, and also allows you to take advantage of like cheap prices. That is if they come, but I think they should be coming along. If Friday was any indicator, markets can just be like a whole big red sea. There are going to be some stocks that are still green, like Tesla was green, Amazon was green. That's because they produce really good financial reports. But of course, those are exceptions. But majority of the market is likely going to be, covered in red, and it's not going to be very fun for this week or next week. At least not until things calm down, because what do markets hate most? They hate uncertainty. And when there's a lot of uncertainty, it means people don't want to be in a market. They want to hold things they know the value of. They want to hold bonds that they know they can get a certain interest rate on. They want to hold gold that, you know, looks nice and has proven to hold value, I guess. But like it's as Warren Buffett says, you rather invest in productive assets. And currently, Warren Buffett's just holding a large lump of cash because even he doesn't see the value of just basically buying anything, because you don't want to buy something expensive. You want to only buy at a margin of safety. And that's where the money is really earned. When you buy at low prices and it jumps high, you earn more than if you were to buy at a high price and wait for an even higher price, because that approach is as risky. Whereas buying low, selling high, that's a cliche for a reason, and you should definitely follow it that way. Let me know what your thoughts are on the market. If there's any stocks that are on your watch list, I could have a look at them as well, show you what I think about them, and then it'd be good to put on the watch list and then just track it as it goes. There are some stocks that are showing some cracks, like stocks that I've looked at previously on this channel. Like we looked at Revolve. So Revolve Group. So the stock's around about just below $18. I'm looking at it and I'm thinking it's not too bad at that pricing, but I think it can come a little bit lower. If it comes down to $15, I'm certainly a buyer. But until then, I'm just gonna look at the situation and see how it goes. I'm looking at InMode, which in 2 weeks' time, on the 17th of February, it's going to be reporting its financials. So I'll be looking at the stock and seeing if there's any weakness in the price to buy up in anticipation of the financial reporting for the quarter. And then Tesla's just flying high and higher and higher, like at $650. There's a lot of enthusiasm. A lot of people are putting money into it because it seems like it's the certain one that seems to be gaining regardless of how market conditions are. Like Friday, market was red. Tesla was, still running. It managed to go up $5 higher than the usual, which is still not too bad. Though it is at a high price, so like if people just like start to run out, then it might not look pretty. Though currently it's showing some really good momentum. And if markets calm down a bit, it could well keep going. And then let's see so we've got the biotech stocks. So earlier we looked at Guardant Health, which seems to have reduced by a few dollars, though reducing from $80 to 70 something just still isn't low enough for me. Even though I like the company, though it's still quite pricey at that level. Let's just see if there's any other stocks that I've looked at. So currently I don't. There's still Smile Direct Club holding very well at that $13.50 mark. I think it could have some little bit of weakness on profit taking, but I think overall stock's got a good long term future. Good one to keep holding. And in let's see, Virgin Galactic. Virgin Galactic should just continue to hold well. There's nothing about coronavirus or anything that's going to affect it because at the end of the day, they're not commercial. They're still making their spaceship, so they can just continue work as usual. There's still, unless there's profit taking, I don't imagine the stock's going to be going down too much. But it is a volatile stock given a lot of people have made a lot of profits, so it's going to be up and down, very choppy for the next few weeks, I imagine. Though it could be one of the exceptions, like Tesla and Amazon. They focus on tech. They aren't particularly affected by the coronavirus, though Tesla is a little bit with the China exposure, the China factory being delayed in terms of its production. So I think that kind of ends me. Like those are all the companies that I've been through so far on this channel. You guys need to recommend more. Well, at least suggest some more companies to look at. Or I'll find some of my own as well. So then we can just build a bigger list of on the watch list, and then we can look at how things go as time passes. Though like this week, just be prepared. China down 8%. US market is likely to be down a little bit as well, if not, well, I think markets last week kind of anticipated to drop with China. So I think the markets will be a bit red, but not as bad as China at all. But it's probably pays to be a little bit aware. Probably stay away from airline stocks right now, airport stocks, tourism stocks. any stocks that has a sort of exposure to China. It's as the current condition is, it's pretty unstable. It's likely to continue to fall for those certain stocks that have that relevance. And I think as time goes on, there's going to be quite good buying opportunities. So watch for those. And until then, good luck in